Ladies and gentlemen, welcome back to the channel. We are going to go over all of your news today that could move the markets. And there's actually quite a bit of it for a Saturday afternoon. So we're going to get into that. We're going to talk about what has been affecting this market, this liquidity issue, especially in crypto. Now, good news is it looks like crypto markets are stabilizing over this weekend. And that could be good news for this upcoming week. Now, we're also going to talk about some of your bigger catalysts coming in this next upcoming week and my general expectations for next week. Do me a quick favor, ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come invest with us. Okay, this is a long journey. We're going out to find the under the radar AI stocks. These are stocks that Wall Street is not paying attention to. I mean, for an example, there's one company that raised guidance 400% during this crash. Nobody paid attention to it. And then on Friday, the stock went up 46% in a day, right? These are opportunities we are executing on. If you guys want to come join, that link is down below. Now, we're also going to get into your Tesla stock-specific news today as well, because there's some important news in Teslonian land that you need to know about. Do me a quick favor again, hit the like button, and let's get started. So, first and foremost, for anyone that does not know what has been affecting this market recently, I want to give you a brief overview so we're all on the same page. There's been smaller things that have affected this market, okay? You've had uncertainties generally because the government shut down. You had uncertainties for a while there around the AI situation. Is it a bubble? Is it not? Is NVIDIA going to miss? Are they going to beat, right? There was uncertainties there. There has been uncertainties around the economy and how the economy is doing. At this present moment, we got NVIDIA earnings much better than expectations. Not a huge shocker. We knew that was going to happen, okay? Jensen Huang told us in early October essentially what he was going to say in this past week when they reported earnings. And he basically said the exact same thing, which was good. The AI is alive and well. They have a $500 billion worth of orders over the next, 18 months or so. Like, AI alive and well. So we got certainty on that. We got Walmart earnings, which was basically as we expected. Walmart said not much is changing. There was no recession warning given. In fact, Walmart raised their guidance. Okay, so less uncertainty there as well. We got some economic data like the jobs report, which lowers uncertainty as well. The economy is doing okay. Well, some people more recently have pointed to the Fed situation. The fact that the probabilities for a Fed rate cut basically plummeted this past week. Some people pointed to that as the main culprit of this market and what was causing the downside. Okay. It wasn't. We seen on Friday, Fed Williams came out and supported a rate cut. Fed Moran supported a rate cut. And as you're going to hear today, other Fed officials say they basically have an open mind for December. Okay. So you started pricing in that rate cut again on Friday, sharply. It seemed pretty orchestrated in my opinion. But the coast was still not clear on Friday. Friday was a good day, generally. But coast is still not clear. Why? Because the main problem in this market is crypto liquidations and crypto margin calls. See, when a firm is in crypto, they're in margin, they're over leveraged, they have other assets as collateral. Stocks, bonds, whatever it is. In this case, probably a lot of stocks. And we had the first issue on October 10th where basically a stable coin got destabilized. And instead of pulling quotes from other exchanges, the stablecoin just broke for a couple of minutes. Hundreds of thousands of traders were liquidated, and that has since caused a cascade that has gotten worse and worse. Imagine it like this. If everyone owned crypto and had their, margin requirements tied to Bitcoin's price, the lower Bitcoin goes, the more of this liquidation you're going to see, right? And it was slow at first, and then it happened all at once, right? In here, this is Bitcoin on screen. Kind of slow-ish in here. You kind of sold off initially, recovered a little bit, sold off, recovered a little bit. But the last maybe 2 weeks or so, since November 10th, less than 2 weeks, the sell-off really started to amplify. Okay, and on November 20th, on Thursday, Bitcoin was down 7.5%. And then you fell 2% yesterday. Okay, it just got worse and worse. And you've seen more and more margin calls. And Bitcoin has led this market, right? Bitcoin sold off first. Bitcoin presumably will recover first. Okay, we'll see about the whole recovery part. But in good news, it looks like crypto markets have begun to stabilize. I mean, this is a pretty important level. This is kind of where you started bottoming back in April, right? When Bitcoin went from about 110,000 down to about 84,000. Okay, this is kind of where you stabilized last time during a crash. And there are signs of stabilization out there. So the main causation of why this market has been crashing, be it crypto, starting to stabilize, should mean good things ahead for this market. Now, part of the reason Bitcoin did start to stabilize, in my opinion, is crypto just wants any kind of liquidity they can get, right? Which is a rate cut at this point. So you started pricing in a rate cut again on Friday, and crypto started to stabilize after hitting that low of 80,732. Bitcoin's something we want to watch over this weekend because that's going to tell us more about how stocks are going to do for this upcoming week. But if this continues to hold, next week should be a pretty good week. So a lot of people don't know this, but the problem is actually in Bitcoin. See, a lot of people are like, okay, look, government shutdown resolved, economy doing fine, consumer doing fine, Nvidia did great. Why are stocks still under pressure? The only thing that makes any remnants of sense is the problems in the crypto market that have been dragging the stock market down. Now, Nvidia's CEO, Jensen Huang, has reportedly said that Nvidia's work was helping the US to avoid a recession. Now, also in the news today, Trump's White House prepares a tariff fallback prior to the court ruling, according to people familiar with the matter. Now, this is something that's going to come up over the next couple of weeks. If the Supreme Court rules that Trump's tariffs are illegal, that could create some uncertainty again. Now, you would think it would be positive. Less tariff inflationary pressures from the Fed's perspective would potentially allow rate cuts, right? Tariffs are a drag to a certain extent on the economy in the near term, and there would be less of that. Okay, so on paper, you would think the Supreme Court ruling against Trump's tariffs would be good, but it could introduce another layer of uncertainty. Now, the White House is basically saying, hey, if the Supreme Court rules against the tariffs, we're already going to have a plan in place to keep them in effect. There's a lot of different laws and provisions the White House can use to keep tariffs in effect for a certain amount of time. Like, Trump could keep a 15% universal tariff in place for 150 days for no reason, just if he wants to, okay? So, this could create some uncertainty, but we'll have to see what the courts say. Now, Jensen Huang, I think, put it beautifully here. He says, quote, if we delivered a bad quarter, it is evidence there's an AI bubble. If we delivered a great quarter, we are fueling the AI bubble. So, That's Jensen Huang basically saying there's no way around it. Markets are going to have their assumptions regardless. Which, good thing NVIDIA had a good quarter. Fed Collins says that Fed policy is mildly restrictive, and that's appropriate for the current economy. She says, have not made a decision about the December FOMC meeting outcome, and she still sees reasons to be hesitant about a December rate cut. But she's kind of starting to lean in that direction a little bit more, it sounds like, following Friday. Now, the odds of a rate cut in December stand at 67.3%. The odds of a pause at 32.7%. This is going to be historical no matter what. Okay, because it's going to be close. There's going to be a lot of Fed officials that, want to cut rates. There's going to be a lot of Fed officials that don't want to cut rates. And it's going to be the most divided Fed meeting we have had in a very long time. Normally, the Fed is pretty unanimous in what they do. This is not going to be the case. Now, the BLS says that real earnings data for November 2025 will be released Thursday, December 18th. The BLS will not publish October 2025 real earnings data because the BLS could not collect relevant CPI data for October. BLS is unable to retroactively collect these data points. So, December 16th and December 18th look like they are going to be the big days. That is after December 10th. And I think, Fed Williams coming out to support a rate cut and the probabilities of a rate cut surging in December are no surprise after the BLS canceled the CPI report that we were supposed to get on December 10th and canceled the October jobs figures, at least the survey data, that we were supposed to get before the Fed meeting. We essentially don't really have any economic data that is going to move the needle on the economy to move the needle to get a Fed rate cut. So the Fed just jawboned this market. Now, you can see for next week, on Monday, you don't have much. You have Dallas Fed Manufacturing Index, and that's pretty much it. Tuesday, you have ADP employment change weekly. Last week was negative 2.5 thousand. The week before that was negative over 11,000. So, with that trajectory, wouldn't be surprised if it actually goes positive. Now, it says you're going to get PPI month over month for September, expecting 0.3%. This might get canceled, so we'll have to see. Retail sales month over month for September are expected at 0.4%, but again, this might be canceled. Keep that in mind. S&P Case-Shiller home price year over year expected to come in around 1.6% positive. Business inventories month over month expected at 0.1%. You're going to get pending home sales, Richmond Fed manufacturing data, and Dallas Fed services data as well. On Wednesday, durable goods orders month over month expecting 0.2%. This data is for September, so maybe we get this, maybe we don't. There's still a lot of questions on what we're going to get as far as economic data in this upcoming week. But we do have the Chicago PMIs on the schedule here and the initial jobless claims through November 22nd with a forecast of 224,000. So that was another story last week. When we got all of the initial jobless claims, they were better than expected across the board. So showing the labor market is probably not as bad as feared. Now on Thursday, we really don't have anything at all. And then on Friday, really don't have anything either. So it looks like the big day is going to be Wednesday, assuming we do get some of these data points like durable goods orders, and then on Tuesday with retail sales, PPI, and the ADP employment change. But all of this data is for September, okay? So how much of an impact is it really going to have? That is a question, okay? Now, for earnings, still some earnings to come. Monday in after hours, Symbotic, that's like the robotics company. Tuesday, Alibaba, Neo, Abercrombie & Fitch, Analog Devices, Kohl's, Best Buy, Pony AI, Burlington in pre-market. Tuesday and after hours, you have Dell, Workday, Zscaler, Autodesk, Ambarella, PagerDuty, NetApp, and Urban Outfitters. And then Wednesday and after hours, you have John Deere. So getting to the end of this earnings season, there's still going to be small cap companies that just don't make the grade here, that don't come up on the calendar. But largely, you're getting towards the end of earnings season. The reason I'm optimistic that this market can start to move higher in this upcoming week is, again, crypto stabilizing, at least as of now. It's not continuing to crash. You've really started consolidating and stabilizing. And I think really most of that has to do with just, you've seen so many margin calls. People have gotten, stopped out of so many positions at this point. But also, look at the sentiment in the stock market, right? The CNN Fear and Greed Index at one point on Friday, or really Thursday, was at 6. I've never seen that outside of a major crash. You're at 11 right now. That is a crazy low number. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is fear. Safe haven demand, extreme fear. Junk bond demand, in extreme fear as well. The AI Investor Sentiment Survey shows 43.6% of investors are bearish, 23.9% are neutral, and 32.6% are bullish. And then the percent of stocks trading above their 50-day moving average at 37.2%. So deep in correction territory. Now, even look at the VIX, right? The VIX was down 11.3% on Friday. Fear is still very elevated. But as I talked about in the days leading up to, Thursday and Friday, when the VIX is this high, you really need something to happen. Like, we really haven't had bad news in the markets for a while. Okay? It's all been in crypto. The liquidations, the problem has been in crypto. Okay? And normally when you get this kind of fear, roughly where you peaked out in December of 2024, where you peaked out in March of 2025, where you peaked out on October 16th, you need to see something happen. You need to see an event. You need to see something, okay, to get fear to rise further. Like April, right? We had a material change and fear rose and we had a 20% pullback in the markets. Without something actually happening, it's hard to sustain these kind of fear levels. Much less go higher to get more fear in markets. Now, in the news today, Waymo has announced that they are now authorized to drive fully autonomously across more of the Golden State. They say, quote, the next stop is welcoming riders in San Diego in mid-2026, which is great news for Tesla, right? To get, to have somebody else breaking into new markets makes it easier for Tesla to break into new markets when they are ready and when the permitting does go through. Elon Musk says version 14.3 of FSD is where the last big piece of the puzzle finally lands. So suggesting that maybe that is when FSD becomes unsupervised. Now, in option activity on Friday, you had 181 different trades totaling $197 million with a positive order value of 83%. A relatively slow day, but some pretty bullish numbers overall. Now, you did have 1.3 million shares that were sold short on Friday, with short interest sitting at 3.25% and 77.5 million shares sold short. Now, I think it's inevitable that Tesla is about to go through a rally, okay? Tesla has been an outperformer on the downside. I believe it's going to be an outperformer on the upside. If I am bullish on the broader markets into the end of this year, then I have to be bullish on Tesla. Now, Tesla has an RSI of 40, so definitely a lot of room to strengthen. And I think we're about to get a series of catalysts, like Tesla's robotaxi launching in different cities. And that is going to be, good news in a recovering market, which will allow Tesla stock to go up quite a bit. And I think a lot of people are going to be surprised just with how strong this market rally is going to be, right? Once we clear up finally the issues in crypto, which it looks like they're washing themselves out a little bit here, okay? We've had nothing really but good news, okay? Now we're pricing in a Fed rate cut. Walmart earnings were good. Nvidia earnings were good. It looks like the consumer and the economy are doing okay. That is the recipe for a year-end rally. Once you stabilize the crypto markets, which in the time of recording this video, Bitcoin still at about $84,100. It's only moved lower $200, which is a big stabilization from what we've been used to. And as long as we don't see another round of liquidations over this weekend, next week should start on a strong note. And again, we'll see what kind of economic data we get, what is delayed, what we actually get, and how that moves the odds of a Fed rate cut. Keep in mind that data is for September, so in theory, it shouldn't move the odds of a rate cut too much. And, well, I think we're set up for a move higher here. Know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode as well if you guys want to come join the trading community. But with that said, have a great rest of your day, and I will see you in the next one.